Welcome to our latest Xau USD Analysis Report, covering the period from September 29th to October 4th, 2025. In this presentation, we'll examine gold's recent price action, technical indicators, market sentiment, and provide trading recommendations for both short and medium-term horizons. Gold has continued its impressive bullish momentum, approaching the significant psychological barrier of $4,000 per ounce. Let's dive into the details of this remarkable rally. Gold has maintained its impressive bullish momentum during the period of September 29th to October 4th, 2025, reaching new heights and approaching the significant psychological barrier of $4,000 per ounce. As of the latest trading session on October 4th, gold was priced at $3,886.45, representing a daily gain of 0.78% or $29.89. Trading activity during this period has been characterized by increased volatility, with intraday ranges spanning from $3,838.70 to $3,891.76. The weekly gain stands at 3.72%, while the monthly performance shows an impressive 9.16% increase. Year to date, gold has surged by 48.05%. The technical outlook for gold remains predominantly bullish, with the daily time frame showing a neutral to bullish overall rating. The price structure continues to form higher highs and higher lows, confirming the strength of the prevailing uptrend. Moving averages are signaling a buy recommendation, while oscillators remain in neutral territory. A bullish flag pattern breakout has been observed on the charts, suggesting further upside potential. Key resistance levels are established at $3,900 and the psychological $4,000 mark, while support can be found at $3,800 and $3,700. These technical indicators collectively point to continued strength in the gold market. Expert analysts from leading financial institutions have provided valuable insights on the current gold market dynamics. James Stanley from Forex.com notes that gold has recorded 7 consecutive weeks of gains, with the most recent week showing an impressive 3.38% increase. While the uptrend may be challenging to chase at current levels, it should not be ignored or countered with short positions. Christopher Lewis from Daily Forex describes the gold market as on fire and determined to reach the $4,000 threshold. He identifies the $3,800 level as a significant support zone, which was the measured move target of a previously formed ascending triangle pattern. Both analysts agree that pullbacks should be viewed as buying opportunities. Several fundamental factors continue to drive gold's impressive performance. Federal Reserve monetary policy expectations, particularly the anticipation of multiple interest rate cuts before next summer, have significantly bolstered gold prices. Global economic uncertainty persists, enhancing gold's appeal as a safe haven asset. Despite central banks' efforts to control inflation, market participants remain cautious about potential inflationary pressures. Ongoing geopolitical conflicts and trade tensions continue to create market uncertainty, driving investors towards safe haven assets. Among these factors, Federal Reserve policy appears to have the strongest impact on gold prices, followed by economic uncertainty, inflation concerns, and geopolitical tensions. The overall market sentiment toward gold remains decidedly bullish. Most analysts maintain positive outlooks, with consensus expectations pointing toward continued strength in the medium to long term. Short-term pullbacks are anticipated and even welcomed as healthy corrections within the broader uptrend. The approaching $4,000 psychological barrier is widely viewed as the next significant target, while $3,800 is considered a crucial support level that should attract buyers on any retracements. Institutional investors continue to increase gold allocations amid economic uncertainty. Analyst sentiment indicators show 75% bullish, 20% neutral, and only 5% bearish views on gold's prospects. For short-term traders with a 1 to 2 week horizon, we recommend looking for pullbacks to the 3,800 to 3,850 range as potential entry points. Place stop losses below $3,750 and target the $3,950 to $4,000 zone. Risk management should be limited to 2 to 3% of trading capital per trade. For medium-term traders with a 1 to 3 month outlook, maintain core long positions and add on dips. Key levels to add exposure include pullbacks to $3,800 and $3,700. After breaking above $3,800 and $3,700, $4,000, target the $4,100 to $4,200 range. Implement trailing stops as price advances to protect profits while allowing for continued upside potential. Gold continues to demonstrate remarkable strength, driven by a combination of favorable monetary policy expectations, global economic uncertainties, and strong technical positioning. While the market may experience short-term volatility and potential pullbacks as it approaches the significant $4,000 psychological barrier, the overall trend remains firmly bullish. Key takeaways include maintaining a positive bias toward gold, focusing on buying opportunities during retracements, recognizing $3,800 as a key support zone, targeting the $4,000 threshold, and implementing proper risk management with position sizing and trailing stops. Thank you for joining us for this analysis of the gold market.